Hi, yeah, I'm Elliot from Free Life Financial, and today I'm going to share my top 5 tips for home movers in the UK. If this is your first time watching, then please feel free to subscribe by clicking the subscribe button below. Let's get straight into it with my first tip, which is multiple valuations. If you're going to think about selling and moving, you're going to need to know how much your property is worth. The easiest way to do this is to contact an estate agent and tell them you're thinking about selling and ask for a free valuation. The estate agent will come over and they'll tell you how much they think you could sell your property for. They'll also tell you what their fees would be for selling your home. I recommend contacting more than one estate agent so you can get a second opinion on how much the property is worth, as well as comparing the different services that can be offered and for what fee. Tip number 2 is work out your equity. Your equity is the money you'll have left after selling your home and repaying your current mortgage. So if you have a property worth £100,000 and you currently owe £50,000 on your mortgage, then you know that after you sell your home and repay your mortgage, you'll have £50,000 left towards your next purchase. It's important to work this out in advance so that you know what kind of deposit you'll have available for your next property. You'll also need this to work out what your mortgage options are going to be on your next purchase. However, do bear in mind that there will be fees associated with moving home which may need to come out of your equity. Which brings me on to my next tip. Tip number 3, work out the costs of moving. Moving home can be expensive. You'll usually pay an estate agent a fee for selling your home. That could be a flat fee or it could be a percentage of the sale price. You'll want to confirm this with the estate agent in advance before you agree to put your property on the market with them. You'll also pay solicitor legal fees for helping you sell your property and for helping you purchase your new one. You can call solicitors for quotes once you know how much you're going to be spending on your next property and how much you're going to sell yours for. You may be liable for stamp duty, which is a tax that you pay when you purchase a property in England. There are calculators online where you can get an idea of this in advance. You might also choose to use a mortgage broker to help you find the most suitable mortgage deal for you. If so, you may pay a broker fee. All of these fees add up and some of them can be expensive, so it's a good idea to get an idea of these costs of moving before you start the process. Of course, if you have savings, then you can use them to pay for these costs. Otherwise, most of these fees can be paid using the equity from your current home. However, there are some fees which need to be paid up front before completion. For example, searches, which are inquiries made by your solicitor about the property you're purchasing before you complete the purchase. Usually you'll need to pay for searches up front and you would be unable to use your equity because your equity isn't released until completion when your house is sold. This could also be the case with your mortgage broker. You'll need to check in advance with your mortgage broker at what point you'd be charged a fee. Fees that are paid before completion will need to be paid by you because, again, you won't have the equity available yet because it's before completion. Tip number 4 is to compare different mortgage options. You might have a mortgage now, for example, with Nationwide. That doesn't mean that your next mortgage has to be with Nationwide as well. If you're moving home, it can be worth comparing different providers to find the most suitable deal. And tip number 5 is to try to avoid an early repayment charge. If you were in a fixed rate mortgage, it's likely that you would be charged a fee to come out of your mortgage during the fixed term. This fee is usually a percentage of the amount repaid, so it can be quite high. For example, if you have a 5% early repayment charge and you want to repay your mortgage, which is £100,000, then you could be charged £5,000 to come out of your mortgage during the fixed term. So, of course, we want to avoid that if we can. The first way to avoid that is to try to time moving home. Try not to move home during a fixed term with an early repayment charge. If your fixed rate comes to an end in 6 months, can you wait 6 months to move to avoid that early repayment charge? Bear in mind that you'll only pay this if you complete your move during the fixed term period. Moving house, the whole process can take months, so you might be able to get the ball rolling and start the process during a fixed term period if you're only, for example, a couple of months away from the end of your fixed term. If you're doing this, make sure you explain to your solicitor that there's an early repayment charge on your current mortgage and that you do not want to complete before that specific date when that charge will no longer be applicable. Let's look at an example. Let's say you want to move house and you're currently in a fixed rate which has an early repayment charge. Now it's January and your fixed rate and early repayment charge finishes on the 1st of April. You can start the process, you can get the ball rolling, but make sure the people who are buying your property, the people who you are buying from, and your solicitor are aware that you do not want to complete before the 1st of April. Completing just a few days before that date could mean that you are charged the early repayment penalty. And again, remember, it can be a lot, it could be thousands. Also bear this in mind when you are renewing your fixed term. If you're thinking of moving within the next few years, but your current fixed rate is up for renewal, you might want to consider not taking a long fixed term like 5 years if you think you might want to move home after 2 years, for example. However, of course, it's not always possible to plan things perfectly. Circumstances change, plans change. If you find yourself wanting to move during a fixed term where there's an early repayment charge, check with your lender to see if your mortgage is portable. This means that you can take your current mortgage with you to a new property. And if you need to borrow more to complete that purchase, then you take a second mortgage with that same lender to make up the difference. Doing it this way could save you thousands, so it might be worth considering. And they are my top 5 tips for home movers. If there are any tips that you'd like to share, then please leave in the comments below. If you have any questions or would like any more information about moving home, then please get in touch using the contact details below. Thank you.